Today, we're diving into the world of education loans. It's a topic that affects so many students and families, but is often surrounded by confusion.
Absolutely. It feels like everyone hears the term education loan, but not everyone knows exactly how it works or what to look out for.
Let's start simple. At its core, an education loan is financial support that helps students pay for college or university, right?
Right. The money typically covers tuition, books, accommodation, and sometimes even daily expenses. But it's not free money. You have to pay it back, usually with interest.
That's the catch. A lot of students overlook how much interest can add up over time. Did you know some loans start charging interest immediately, while others wait until after graduation?
Yes, and that difference can be huge. Loans that accrue interest during your studies can end up costing much more. It's important to read the fine print before signing anything.
Speaking of fine print, have you noticed how many types of education loans there are? Government-backed, private banks, even some from non-banking financial companies.
Exactly. Public sector banks often offer lower interest rates, but private banks might be more flexible in terms of how much you can borrow or what courses are covered.
And then there's the question of collateral. Some loans require you to pledge an asset, like property, while others, especially for smaller amounts, might not.
That's true. Collateral-free loans are usually for amounts up to a certain limit. Anything above that, and the bank wants some security.
I remember when a friend applied for a loan, they were surprised at how much paperwork was involved. Proof of admission, previous academic records, income documents, the list goes on.
Yeah, and banks are pretty strict about eligibility. They look at your academic performance, the reputation of your institution, and sometimes even your future job prospects.
Do you think that's fair? Basing a loan approval on where someone got admitted?
It's a double-edged sword. On one hand, banks want to make sure you'll be able to repay. On the other, it can make it harder for students from less-known colleges.
That's why comparing loan options is so important. Some banks offer special schemes for courses abroad, while others focus on domestic education.
And don't forget about moratorium periods, the grace period after graduation before repayment begins. Some loans give you 6 months, others might offer a year.
That's a lifesaver for students who need time to find a job, but interest might still pile up during that time, depending on the loan terms.
Exactly. A lot of students assume the clock stops, but the bank's meter keeps running.
Let's talk about interest rates. They vary a lot, right?
Definitely. Public sector banks in India often have lower rates, sometimes linked to the marginal cost of funds-based lending rate, or MCLR. Private banks can be higher, but might offer quicker processings.
And education loans sometimes have floating rates, which means they can change over time. That's a bit of a gamble, isn't it?
It is. If rates go up, your monthly payments increase, but if they drop, you could pay less. Some people prefer the certainty of fixed rates.
The repayment period is another big factor. Some loans let you stretch payments over 15 years. Others want their money back in 7 years.
Longer terms mean smaller monthly payments, but you end up paying more in total interest. It's a trade-off.
Have you heard about government interest subsidies?
Yes. For example, in India, there's the Central Sector Interest Subsidy Scheme. It helps students from economically weaker sections by covering the interest during the study period and moratorium.
That's a relief for many families. But you have to meet specific eligibility criteria, and not all banks participate.
True. It's another reason to closely check which options fit your situation.
What about co-applicants? Most banks require a parent or guardian to co-sign the loan.
Right? That means if you fail to pay, your co-applicant is responsible. It's a big commitment for families.
And if you're studying abroad, the process can get even more complicated. Some banks want to see the admission letter, visa approval, even travel plans.
Plus, foreign universities may have higher fees, so loan amounts usually need to be bigger. That might mean collateral is mandatory.
There's also the question of currency. If you're borrowing in rupees but paying in dollars, exchange rates can affect how much you actually have.
That's a headache nobody warns you about. A sudden currency fluctuation could mean you have less money than you thought.
Another point is prepayment. Some loans let you pay off the balance early without penalty, but not all. That flexibility can save a lot on interest.
Always ask about prepayment options. If you land a great job and want to clear your loan fast, you don't want extra fees eating up your savings.
Have you seen cases where education loans actually affect a student's motivation?
I have. Some feel pressured to choose higher-paying jobs just to repay, rather than following their passion.
That's a tough trade-off. But on the flip side, without loans, many people couldn't access higher education at all.
Absolutely. For a lot of families, it's the only way their children can study at their dream university.
There's also the emotional aspect. The pressure of debt can be overwhelming, especially if job placements are uncertain.
That's why financial literacy is so important. The better you understand your loan, the less it feels like a dark cloud hanging over you.
Speaking of understanding, do you think students get enough counseling before taking a loan?
Not really. Most just listen to what the bank says, without independent advice. It would help to have dedicated financial advisors in schools or colleges.
Or at least clear online resources. Sometimes the bank's website is a maze. So many terms and conditions buried in fine print.
It's almost like they don't want you to find out what you're signing up for. Jokes aside, transparency is really important.
Let's talk about what happens if you can't repay. Are there options?
Some banks might restructure your loan or offer temporary relief, but defaulting can ruin your credit score and make future borrowing tough.
So, it's crucial to plan ahead. Only borrow what you really need and have a realistic idea of how you'll repay.
Exactly. And keep track of deadlines. Missing even one payment can have long-term consequences.
I've also heard about education loan insurance. What's your take on that?
It's an extra cost, but it can protect your family if something unexpected happens. Not everyone needs it, but it's worth considering for peace of mind.
That's a good point. Sometimes it's better to be safe than sorry, especially if the loan amount is big.
And as with all insurance, check what's actually covered. Don't just buy it because the bank says you should.
Have you come across any creative ways students manage their repayments?
Some take up part-time jobs during studies or opt for internships that pay a stipend. Every little bit helps reduce the eventual burden.
It's a balancing act. Juggling work and studies isn't easy, but it can build valuable skills and a financial cushion.
And sometimes, scholarships or grants can replace part of the loan need. Always explore those before jumping straight to borrowing.
Absolutely. Every rupee or dollar you don't have to borrow is a win.
And don't forget to budget. Knowing where your money goes each month can make repayments less stressful.
That's true. Even simple apps can help track spending and keep you on course.
One last thing, compare loans not just on interest rates, but also on processing fees, documentation charges, and customer service.
Sometimes a slightly higher rate is worth it if the bank is more supportive or flexible. It's not all about the numbers.
In the end, education is an investment in your future. Loans are just a tool to help make that possible.
But like any tool, you need to use it wisely. Do your homework, understand your options, and don't be afraid to ask questions.
And remember, while the numbers matter, your dreams and well-being matter too. Don't lose sight of why you started this journey.
Wise words. As we wrap up, maybe our listeners can reflect. If you had to take a loan, what would your biggest concern be? And what steps would you take to make the process smoother?
Great food for thought. Thanks for tuning in, and we hope this conversation helps you navigate the world of education loans with confidence.